Great. Hello, everyone, and welcome to Financial Fundamentals with John Beer. I'm here today with John Beer. I'm here in Dubbo. John, where are you calling in from this morning?
I'm calling in from Forbes this morning, Tim.
Oh, that's fantastic. I will just share my screen so everyone else can tell us where they're calling in from today, unless I'm already sharing my screen. Where are we? Let's see how we're going. Can you see my screen there, John?
I can.
Beauty.
Yes.
If everyone could go to slido.com and enter the hashtag numbers and let us know where you're calling in from today. That'd be great. Good to see some participants rolling in. Good morning, everyone. It's 7:30, which is one of the earliest webinars we've ever done here. So thanks everyone for joining us. You can see we've got one response in from 2825. I think that's somewhere west of Dubbo, either Nyngan or Trangie, not too sure. 2825. Not sure where that is either. Oh, 2346 Manila. It's fantastic. Only 3 responses so far, and we've got way more than 3 people in here. So I'll just give it a little bit more time to see where everyone's coming on. We've got a fair few watching on Facebook as well. So welcome to those watching on Facebook. If you're just joining us, slido.com, enter the hashtag numbers as the event code. And if you're still having trouble there are questions and polls. You join us on the polls to join in and let us know where you're calling in from today. $2825. Looks like we've got a couple in Nyngan or Trangie or wherever it is. It's really good. Righto. We might head on to the next question, just in the interest of time, which is, where are you dialing in from at the moment? Are you at home? Are you already at work? Probably a bit early to be sitting on the tractor or the header for a harvest season this morning. We had a few earlier in the week joining us from the header, the wonder of auto steer. Are you on the run? Are you calling in from somewhere else? Let us know. Someone's on the tractor. That's great. Currently got at least double the 10 people that are in watching us, but we'll forgive everyone because it's a bit early in the morning. How did you hear about this event? Was it via Twitter, Instagram, Facebook, email? Did a friend tell you? Did you hear somewhere else that we're not aware of? Let us know. Beauty. I think we got up to 10 responses nearly on the last one, so I keep going, but I know you've got heaps of great knowledge to pass on, John, so I won't take up too much time. How about we just find out what age group everyone's in out there? Fantastic. You get a good spread, 26 to 30. It's a good age to be in, 26 to 30, I think. Fantastic. A few over 40, not in the typical young farmer definition, but welcome. Sure, the knowledge that John passes on is relevant for people of all ages. So welcome to everyone that's with us today. What's your farming situation? Where are you calling in from? What do you currently do? Are you working on a family farm? Employee? Are you leasing? Are you a contractor? Do you have your own place? You should be able to select more than one here because it's very rare that in today's day and age farmers fit just one bracket. But let us know. You got the numbers starting to roll in now, and I see a few more are joining us on Zoom. So if you've just joined us, slido.com, into the hashtag numbers, and join in and let us know everything about where you're coming from. And the next question, what type of farm are you on or dreaming of being on? What industry are you in is the easiest way to reframe that question. My family's got a sheep and cattle property over at Mudgee, which looks fantastic at the minute, as does a lot of the state. How's it looking at your way at the minute, John?
Looking good around the Forbes area, Tim, that's for sure.
Yeah, a few.
In fact, that poll earlier on about where people are, I saw there was someone on the tractor baling hay this morning as I passed at 6:45.
Yeah.
On my way into Forbes, yeah.
Yeah. Oh, that's great. So where do we go? I've lost the present mode here. We'll come back. We're back again. Let's go back to the polls. We've got a question come in, and I've started having some technical difficulties on my end, but that concludes all our polls. So can I hear you on this, or do I just read? I was watching on Facebook and I liked that I could see the interaction on Slido. Slido is just the interaction tool. You can watch us this morning on Zoom or on Facebook Live and see and hear us there. So thanks for asking that question, Anonymous. John, I might hand over to you to start sharing your screen. So this morning, everyone, I'm joined by John Beer, who's the Rural Financial Counsellor based in Forbes at the moment. John has previously spent a bit of time out west with the Rural Financial Counselling Service. And I won't do him the injustice of a terrible introduction, so I'll hand over to him.
Good morning, Tim. Good morning, everybody. Tim, can you see my screen now?
Yes, all good there, John. Thank you.
Thank you. So, yeah, good morning, everyone. So, and first of all, Tim, thank you very much for inviting me to be part of this New South Wales Small Business Month and to take part in this presentation. So I'm really looking forward to this morning. So the subject you've given me to speak on is financial foundations, bookkeeping, budgeting, and taxation, and learn to safeguard your business. So that's quite a comprehensive subject there. And, you know, we could spend well over an hour on each one of those topics. So this morning is just going to be a very brief overview of those areas, but hopefully it will at least whet people's appetite to find out more about each of those subjects. Just to start with a little brief introduction of myself, I've been living and working in Australia for the last 13 years after emigrating from the UK. So in the UK, I had a banking financial background, but really involved in family farms, and my dad worked on a farm until he retired. So we were always down on the farm as kids, so farming's in my blood. So working as a rural financial counsellor for the last 13 years has really been an enjoyable job, you know, working with farmers, but also using my financial skills as well. So that's been a great job. So I was 11 and a half years working in Bourke, and for the last 2 years working in Forbes. I completed a Bachelor of Agricultural Business Management through the CSU 4 years ago, and that was a really enjoyable experience, meeting lots of other students at the unis when I went for the, you know, the day you go, or a few days each half year, the residential courses. Yeah, so that was really good. And now I still do a little bit of sort of part-time training on agribusiness courses through an RTO based in Dublin. So also enjoy that and the interaction with the students on that as well. I'm married, 2 grown-up children, 26 and 23, and we've got 2 little, my wife and I have got 2 little foster boys at the moment, little brothers aged 3 and 4, so that keeps our hands full at the moment. So that's just a little bit of brief background about myself. So we better make a start because yeah, we've got quite a bit to cover. And if I can get the next slide to right, so our first, there we go. Yeah, first topic we'll look at is the bookkeeping. So I don't know whether people can see the chat. I can't actually see the chat, I don't think. I'm not sure if I can.
I can see the chat, John, and I'll
see the chat. You can show it to me, great. So can people just jump on the chat and just put your thoughts in there? Maybe what is bookkeeping? Why do we need to bother with bookkeeping? You know, just a couple of quick responses there to see if anyone's got any thoughts on that before we get into that.
And if you're watching on Facebook, feel free to let us know in the comments section, and I'll read the comments through to John.
Bookkeeping must be one of the few words that's got 3 double letters following each other.
Looks a bit quiet on the chat.
Right, okay, let's carry on.
Well, here we go. We're coming in. We've got Alison's let us know that she says it's keeping records of expenses, income and assets to ensure that business is profitable. Yeah. Allow planning.
Yeah, that sounds good.
And Owen says it saves headaches.
Yes. All right, so look, I looked up a bit of a definition of bookkeeping, and I thought, well, I'll go to the Australian Bookkeepers Association, see if we can get the official word on it, and they didn't have anything as far as definitions there, so I had to resort to Wikipedia. So it's the recording of financial transactions and part of the process of accounting in business. Transactions include purchases, sales, receipts, payments by an individual person or by an organization or corporation. Couple of images there. Look, I just grabbed off sort of Google. The old ledger, handwritten ledger. I remember long ago when I worked in the bank in the UK, my first job was filing away like used checks that people had used up in the, you had to go way up into the top rooms of the bank, up in the attic, and there were some old handwritten ledgers still from in the bank, you know, from the bank when people used to do all the banking transactions in the bank by hand. So it was really good copper plate writing. Interesting to see that. But thankfully, we don't need to do that these days. We've got more modern technology, and you'll see from the other image there. These days, bookkeeping systems can be done on a computer, you know, on your tablet, on your mobile phone, which makes life a lot easier. So you can be out in the paddock, you can look up your, you know, financial records on your bookkeeping system on your paddock. I'll just share one quick story before I go on. When we first got married, this will be our 28th anniversary in a couple of weeks' time. So I left the bank to go and help with my in-laws on their sort of small farming business. Should have known better, really, but you know, I was young and in love at the time, and soon realised that the business wasn't big enough to support 2 families. So I looked for some off-farm income. So an ad in the paper, local paper, for bookkeeper required. So I thought, well, I'd give that a go. You know, as part of my banking qualifications, I had accounting qualifications included in that. So I thought, yes, this should be okay. So I went to see this guy, and he was a milkman in the UK back in those days. They still had milk deliveries from house to house on your doorstep when you wake up in the morning. This milkman had worked all night delivering milk, came home. I was there to meet him, handed me his sales for the week. Said, there you go, there's the computer. Enter all that on the computer. I'm off to bed now. I'll be up again around lunchtime. And I can tell you that was about the longest 3 hours in my life, because I didn't have a clue what I was doing, how to do all this sort of enter the information for him. So that was a bit of a learning experience for me, that's for sure. So why do we need to bother with bookkeeping? And like I think it was Alison who said, we need to work out whether the business is making a profit or a loss. And depending on the size of your business, you might want to calculate that daily, weekly, monthly, annually. If it's a big high turnover business, maybe even a food shop in a big town, they would want to know daily how much their profit they're making, I guess. And farming, it's usually done on an annual basis, because often, if it's particularly a cropping business or wool or even lambs, it's just usually once a year you get your income in. So it's hard to work out, your profit on a daily basis.
John, do you think there's any merit in reviewing it more frequently than annually?
Oh, definitely, Tim. No, I'm not saying you just wait once a year to review your profits. You've got to keep a track on things, more often than that. Certainly, I would say, you want to look at things on a weekly basis at least. And we'll come on to that a bit later on. That's for sure. Obviously, there is also a legal requirement to complete your tax returns accurately for the tax man, and for your GST as well. So you need to keep some records to be able to do that. But really, although there's those things like this management information is what we were just talking about, Tim. So you need to be able to identify early if there's any trends, costs increasing, incomes coming down. You need to identify that as soon as you possibly can, not wait until the end of the year, that's for sure. But also keeping the bookkeeping allows you to compare, your results to previous years or previous periods, if it's quarter by quarter, whatever. And you can, compare to the budget that you've prepared for the year, and you can look at the actuals to see how that compares. And you can also compare your results to industry benchmarks. There's sort of certain standards, if you like, or averages that other businesses are achieving, and you can see how you stack up compared to all those things. So that's some of the reasons for bookkeeping. Now, there's various computer software these days to make the job easy. I've mentioned a few of the popular ones there. I used to teach MYOB bookkeeping when I was in Bourke in the TAFE. There I did a lot of MYOB classes. That was, often one of the most popular bookkeeping systems. But I think, in my experience these days, Xero is really the new boy on the block and has become very popular. It's an online, well, pretty much all of them these days offer online capability. Phoenix has traditionally been a farming bookkeeping system. There's a lot of sort of add-on functionality with Phoenix, sort of mapping and the budgeting side of things, which is really good on Phoenix. So all those are available. And what I would say, and people say, well, which is the best one? Find out what your accountant is using and use the same one. Just from my experience recently, I still do a little bit of bookkeeping for a few people in my part-time. We were using MYOB for one particular client, and his accountant had switched over to Xero a couple of years back and didn't tell us. So every time we submitted our reports in MYOB format, they had to re-enter everything onto Xero. So we were paying their time to do that. So what's the point of that? Might as well use Xero in the first place, which is what they now do. And I say they all offer the online option. So, find out what works for you, what your accountant's using. They're all pretty straightforward to use. A lot of them these days just link to your bank account, so it automatically feeds in what's going through the bank, in or out. You just have to annotate whether that's, you know, sales of sheep or crops or whatever it might be, or what the expenses are. And then the bookkeeping system does the rest. So really, any questions on bookkeeping before I move on to the next topic?
Any questions, guys? Flick them in the chat box.
Yeah.
If you're watching on Facebook.
And what I should say, you know, I still have some clients who still take all their invoices to their accountant every 3 months in a shoebox. And in the 21st century, really, that's not going to give you the management information you need to run your business at the tip of your fingers. Because by the time the accountant gets to it, prepares it, you know, it's going to be 6 months out of date at least. Same with the annual statements. You know, I get people who get their financial statements, tax returns, in May for the year ended the previous June. So some of that information is almost 2 years out of date by the time they get it. So how is that going to help you run a business with out-of-date information? So bookkeeping allows you to keep your finger on the pulse, if you like, as to what's happening in your business, because you can pull off reports, profit and loss reports, you know, all sorts of reports whenever you want to see how things are going.
Yeah, I use Xero, John, and I must say I quite enjoyed how easy it is. My dad, before we converted to Xero, he was a pen and paper and receipts in a shoebox kind of guy. So he's amazed. I'm amazed at how efficient the process has become. Anyway, we've got a couple of questions which have come in.
Yep.
The first is a few comments before the questions. Really, someone's let us know that they're using AgriMaster, a program that their accountant uses, and from what you were saying, John, that's got to be, if your accountant uses it, that's the most.
I think so. And look, these days, the ones I'm most familiar with are the Phoenix, Xero, and MYOB. I've heard of AgriMaster. I've not used it. But look, as these days, most of them offer online functionality. You can log in anytime from wherever you are. And obviously, the beauty of the online capability is that your accountant can log in and be working on your figures at the same time as you are. And anybody else in the business can also log in from wherever they are, making life a lot easier for everybody. Obviously, there's a bit of cost involved because most of them got, you know, monthly subscriptions, whereas in the old days, you could just buy an MYOB package off the shelf, computer package, for about $500. And you could use it year after year after year after year, you know, without any further costs. But now they want you to fork out every month these days for your system.
Yeah, great. Someone's written in and letting us know they're in the startup phase of their business and they're just using an Excel spreadsheet for now. So they're not registered for GST and they're handling their own accounts.
Look, that's fine, whilst the business is small and growing, but, you know, eventually you'll find that you'll outgrow that, I'm sure, hopefully, if the business goes well. So, you know, you'll need to research some of the other packages that we mentioned maybe to see what suits you best. But, you know, Excel is a good operating tool, and we'll see I use that quite a bit for other things, and we'll come on to that shortly.
Beauty. There's a few questions on cash flows, but I'm sure that's something you're about to get to.
Will do. All right, let's carry on then. So that brings me to the next section, I think, which is budgeting, nicely linking in there to budgeting. So just a quick, anybody want to put something on the chat quickly about what is budgeting? Why do we need to bother with budgeting? If I was to offer someone a job, you know, you can kind of work on my farm, you know, you can do a bit of tractor driving, help me look after the stock, you know, need you to work me for the next 12 months because my existing employee's gone on leave. What's the first question you're going to ask me? How much am I going to get paid? Exactly. How much am I going to get paid? Any questions come in, Tim, or not?
Yeah, I've got a few in. Budgeting allows you to create goals and see if you're meeting them.
Yeah.
It's a financial plan for your business. And to make sure you have enough money to pay your bills.
Exactly. So like all of those things, exactly right. So I don't need to do this presentation, do I?
We've had an even more advanced view on that, which is someone uses their previous year's averages to budget and adjust them for seasonal conditions, and that helps them guide their future.
That's great. I mean, that is often a starting point. You've got to use something to work on, and previous year's figures is a good place to start. Yeah, for sure. And look, that's I think with farmers particularly, you know, if they've been in the business for some time, you know, they've done it before. You got previous year's figures. I don't need to bother with the budget because it's going to work out the same as last year, and it'll be the same again. You know, so that's probably one of their mentalities for not really, because we often find people don't bother with budgets. But as your comment said there, you know, that, yeah, we need to set goals, see if we're going to meet them, and if we're going to make profit or not. So it's definitely worth doing some budgets. So, and look, there's various, so like a budget is a formal statement of estimated income and expenses based on future plans and objectives. And that's the point. You might be basing it, starting off on with some previous, you know, figures from the last few years or whatever, averages, but you need to adjust those for your future plans and objectives. No point living in the past. We've got to look to the future. So what's going to change? Is the business going to grow? If so, are the costs going to grow as well? So we need to incorporate all that into your budget. There's different types of budget. You could just have a household budget. You know, do the people watching just have a household budget? Again, maybe most people don't because they know what comes in every month and the expenditure goes out. But I've just prepared there on the screen, just a slide, you can see an example of a basic household budget. Wages come in, you got some, this might be a single person, maybe just renting a house, fairly minimal expenditure, particularly if you haven't got kids at that stage. You know, rent, food, car costs, electricity, phone, probably not much else for a single person. And that shows them how much surplus they got each month and they can spend on going on holidays or going out with their mates and all that kind of thing. But that's just a simple budget. And all budgets work in the same format, you know, income, expenditure. Excuse me. A capital budget might be just, you know, what are you going to spend replacing that tractor? Or building that shed and all those sort of things, what the costs involved in that. Might have just a livestock budget. If it's a big corporation, they might have different, you know, one person might prepare the sheep budget, someone else might work on the crop budget, and then someone will bring all that together and do an overall budget for the business. So why do we need to bother with budgeting? Well, yeah, it indicates how much the business could earn over a period of time. So it might be a year, might be a week, might be a month, whatever. And obviously a budget includes certain assumptions. So if you're talking about crops or stock, for example, well, what price are we assuming they're going to get? What yield are we going to get from our crops? Is it going to be a ton to the acre or is it going to be 2 tons to the acre, hopefully this year? So when you're preparing a budget, obviously put some annotation somewhere, either on the line item or at the bottom of the budget as to what assumptions you've used so that the person reading that budget can see how you've arrived at the figures you've included. Second point there, which someone mentioned earlier on, I think, was it shows whether the business has sufficient working capital. And that might be in the form of cash in hand, cash in the bank, or an available overdraft facility to get you through the year. And it identifies the timing of any shortfall. And this is really key, you know. I mean, I know that from my clients' point of view, most of them, well not most, but a lot of them, big majority of them have had to, you know, go to the banks and extend their overdrafts or arrange some extra finance to get them through until harvest, because after 3 years of drought, you know, money was short. So a lot of them had to increase their their overdraft. And completing a budget will tell you when that needs to happen. I think I've got an example on the next slide shortly. And again, this management information, this is what it's all about. This management information, you can compare your actual figures against budget. And so you can see whether you're on track to achieve that income you thought for the year. And if not, something's going wrong, you can adjust your future budgets or month by month. Is better or worse than planned. And you might need to alter the timing of some of your expenditure. If you know some income's been delayed or not as much as you expected, well, maybe you're not going to buy that new, quad bike or side by side next month. You might have to wait another 3 months until you've got the cash to do that. And there is just an example of a cash flow budget covering a 12-month period. That runs from July to June, so it's a financial year. You can do it, on a calendar year, whatever suits your operation. And it shows you the totals. And you'll see on the cattle sales I put, there was 30 cows, 25 steers, $1,800 a head. So that gives you an idea how they've arrived at those income figures. I think the rest, that's all your income there. So 445 income for the year. If we go down to the next page, that's all the expenses. Looks a bit detailed and a bit small, so won't spend too long there. But if we look at the next slide again, some more expenses, but there we go. So that shows us the business is starting with $17,446 in the bank, but you'll see October, November, if you look at that bank closing balance line, in October, November, the business is going to be short of cash. And in fact, they need to arrange an overdraft facility with the bank for about 15,000. I'd make it 20 just to be on the safe side, to get them through until that income starts coming through from the crops in December. And that's the purpose of a cash flow budget, really, is to see whether you've got sufficient funds in the bank to see you through until the income comes in, or do you need to make some other arrangements? So those answers that came up on the chat were spot on. Okay, so which budgeting software? Well, again, most, or all I should say, of the bookkeeping software programs would offer you a budgeting function as well. So it's easy, you can just copy over your actuals from the previous year, and then you can make some adjustments, as we said earlier on, for the next 12 months, to make it a budget for the next 12 months. But failing that, look, Excel spreadsheets, as also was mentioned earlier, Excel spreadsheets work well, and that example I put up just previously was based on just on Excel spreadsheet. And I tend to use Excel spreadsheets here in the office because, all our clients use all those different bookkeeping programs. So, I just do an Excel because that's sort of universal and can apply to everybody. All right, so that's budgeting. I think that's, any questions on budgeting before we move on?
I've got a couple that came in before, John, before you even got to cash flow. Someone asked said that the bank was keeping asking for cash flows. How could they make them simpler? So you may have already given some insight there, but have you got any further tips?
All I would just say, look, the bank often give you their standard form that they want you to fill in the cash flow budget, but if you can provide your own form, that's usually acceptable. So whether that's from your own bookkeeping software or on an Excel spreadsheet, the banks, in my experience, always happy to accept that.
Great. Should my cash flows be different? The cash flows, my bank cash flows be different to my accountant cash flows at tax time?
Yeah, well, interesting question, because obviously from the bank's point of view, you need to the bank's point of view, you've got to show the business in a good light. Obviously, if you're looking to borrow money, you've got to show you can afford to pay it back. But the guidelines when I'm preparing a cash flow, always make them conservative. So you don't want to be, you know, looking at the pie in the sky figures. You know, what is realistic? Basically, what is realistic? You know, if you work on something that's realistic, then you're not going to fool yourself. You're not going to fool the bank. So let's just work on realistic figures. And look, people say, well, I don't know, what am my cattle going to be worth in 12 months' time? Who knows? Nobody knows, but we're just going to make a best guess. And if we can include that assumption, you know, that's fair enough. That's all we can do.
Yeah.
Right.
I suppose, John, not just strictly talking about cash flows, but there's sort of a difference between keeping management account and keeping your tax accounts, isn't there?
Yeah,
which you may cover in the future too.
Yeah, look, and we're going to come on to a little bit of that maybe in the next section, talking about taxation. Budgeting, like tax accounting, like that's all more to do with historical. When you're reporting your figures for tax, that's what's actually happened. You can't really alter that. What's happened has happened. Your income's your income, your expenses are your expenses. So that's, you know, you're working on actual information, whereas budgeting is usually looking to the future and, you know, what you're hoping to achieve in the future. But yeah, so it's all about management though, and planning for the future. You know, is the business going to be viable and so on? So yeah, well, maybe we move on to taxation then, and that might, you know, help us to look at some of that as well. So
that's good.
Generally, there are 3 types of tax that businesses might be liable to pay. So obviously, GST, if the business is big enough, you know, if your turnover is over the 75,000 figure, if it's still that figure, you can voluntarily register for GST, obviously, if your turnover is less than that, if you're in a farming business. So GST, you pay income tax and capital gains tax, potentially. So let's look at each of those in turn. GST, can anybody tell me just on the chat quickly, current rate of GST, and did that rate of GST change in the recent federal budget?
Few answers flying in at 10%.
Yeah, good. That's exactly right. And look, prior to the, you know, COVID-19 pandemic, there was been quite a bit of talk and speculation at some stage about the GST rate changing. You know, it was felt that might be one way the government could recoup some funds to, you know, repay the country's debt. So possibly increasing that rate from 10% up to something higher. And I think here in Australia, we've been very fortunate to have a rate of only 10% in any case. Where I'm originally from in the UK, their VAT, they call it, value-added tax rate is 20% at the moment. So, you know, we're doing quite well to keep our rate at 10. Obviously, the rate didn't change in the budget. You know, in the advent of coronavirus, the government want to encourage spending and not have the opposite effect. So obviously they left the GST rate unchanged at this stage. So what is GST? So it's a goods and services tax, broad-based tax of 10% on most goods, services, and other items sold or consumed in Australia, the ATO's definition. And look, you might not realize it, but your business is basically an unpaid tax collector for the ATO. You're paying all the GST that you collect on sales to the ATO after deducting any GST that you've incurred yourself. And I'll just give you an example of that on the next slide. So for example, in a farming business, and usually this is completed on a quarterly basis every 3 months. Excuse me. So in that example, look, the farmer sold some wool. The base price was 50,000, but of course he gets GST paid to him on that as well. So he would have had $55,000 paid into the bank. Sold some sheep for 40, had GST on that as well. So he would have got 44 paid into the bank. So his total income was 99,000, but you can see there he collected $9,000 GST in the process. during that 3-month period, he spent $50,000 on his various expenses, you know, fuel and repairs and whatever else, sharing costs and so on. Then he would have incurred $5,000 GST on that expenditure. So as you can see, overall, he received 9,000 GST. He's already paid 5,000 GST. So he's now got a liability at the end of that 3-month period to pay the $4,000 balance over to the ATO. So, you know, if anyone in the business already, you'll know you've complete your badge return, your business activity statement every 3 months. And then you send the ATO. Sometimes it may be your income is less and your expenditure more. You might have spent more and spent more GST than you've received, in which case then the ATO will send you a refund. So basically GST doesn't impact your farm, you know, the end of the year profits at all, but it does impact your cash flow, because you need to be aware that you might have to refund that $4,000 to the ATO and make sure you have the cash to be able to do that when the time comes. So GST, just to slip back. So GST is fairly straightforward. There's not a lot more to say than that. So just make sure, you know, you're aware of your potential liabilities there, but doesn't affect your profit and loss at all. Going on to talk about income tax. So income tax is a tax imposed on individuals or entities, taxpayers, that varies with respective income or profits. Income tax generally is computed as the product of a tax rate times the taxable income. Taxation rates may vary by type or characteristics of the taxpayer. So for example, if you're a sole trader, individual, you pay a certain tax rate, and we'll see the scale of those in a second. If you're a company, then you pay a different tax rate. So we look at some examples here. Oh yeah. So so this is my question. Did anybody notice if there were any changes to the income tax announced in the recent federal budget? Just trying to keep you all awake and keep you on your toes this morning.
Everyone likes a good tax cut. And yeah, we've got a few answers saying yes.
Yeah.
But not with too much more detail.
Yeah, that's all right, Tim. Great. Well, let's see what actually happened. So the government had already planned to introduce some tax cuts in 2 years' time, but obviously with the pandemic and the effect on the Australian economy, they decided to bring those tax cuts forward to come into effect on the 1st of July of this year. So, so everyone, taxpayers then I should say, will benefit from an earlier than expected tax cut. And I'll just show you how that, so how they do that, there's different bands, and you'll see from that slide. So like everybody's allowed to earn $18,200 a week. A year, $18,200 a year without paying any tax at all. And then as you start earning more than that, you start paying tax. So initially it's 19% on the next 18,800 up to 37,000. Then you go on to higher rates after that. So what they've done, they've increased that band. So instead of the first 18 to 37 now at 19%, so you can now earn up to 45,000 and only pay that 19% tax on that section of the income. So it's effectively a saving, and I'll show how that works on the next slide. So here's an example. Look, someone out, they're earning $70,000, say, maybe working, I don't know if they earn that much working on a farm, but maybe working off farm or something, earning 70,000. So prior to the tax adjustments in the budget, so on the first 18,200, they pay no tax. On the next 18,800, they pay 19%, so 3,572. And then on their income above 37,000, they're going to pay 32.5% tax, which is another 10,725. So they'd pay $14,297 tax in the financial year just ended earlier back in June. So for this next financial year that we're now in, with the tax cuts in place. So now they can earn up to 45,000 at 19%. So they'll pay more tax in that category, but they'll pay less tax in the next category. So above 45,000, up to their income of 70, pay 32.5%, 8125. So they'll pay for that next year $13,217. So for someone earning $70,000, the tax cuts introduced by the government in the budget will save them $1,000 a year in tax, basically. So that's how it works. And obviously the government want people to have more money to spend to revitalise and boost the economy. That's what it's all about, to try and get, and that money hopefully going back into businesses, in the shops, you know, so that people benefit. So I thought I'd just go in to see, like I see from the poll earlier at the beginning, you know, a lot of you have already got your own businesses, so you know all this already, but we'll just run through for those that are sort of new to the game. Look at the column on the left here. I've got some examples here. So just look at this column on the left. First of all, so this is maybe just like a typical small farm, you know, selling some sheep, selling some wheat, canola, bit of wool, total income $270,000 for that year. They got some expenses, they got some fodder and lick and stuff like that, fuel, repairs, maintenance, depreciation, shearing costs, other expenses, and their total expenses were $200. So you can see they made a profit of $70,000 for that year. So let's assume, then they would have income tax would be assessed, calculated just like on the previous example that I showed you there. With the instant, so one thing the government have done, they've changed the rules for the instant asset write-off. This has been in place for a few years, since 2015 now. Initially up to 20,000, you could buy an asset up to 20,000 and write it off. Currently, there was a rule in place you could spend up to 150,000 and write it off initially, and now in the budget they've sort of said it's sort of pretty much unlimited. And just to show the impact of that, in that second column, figures, look, it's the same farmer, same income, same expenses, but what he's been able to do, he's bought himself a new tractor, small tractor, well, it could be second-hand one, doesn't have to be new. He spent 70,000 on a tractor. That means now his expenses were 270 for the year. So in actual fact, he's not made any profit and he won't pay any tax. So that's how the instant asset write-off works. You might have read about that in the budget as well. Excuse me. And that's why it's such a sort of quite a big thing for farmers, and especially this year, while you know crops and everything's looking good, could be a big year for income. So a lot of people will have the opportunity to go out and replace some, machinery or whatever, spend some money to help to reduce the tax bill. Normally, of course, previously, obviously you can go and buy a tractor, but that would be depreciated. So usually it's like 30% depreciation each year going forward. So instead of writing the whole 70,000 off in one year, it would have only been the 21,000 deduction in that particular year. So you would have still paid some profit, still paid some tax, sorry. So that's how the instant asset write-off works. And then just quickly look at capital gains tax. Capital gains tax is a levy you pay on capital gain made from the sale of that asset. So it might be applied to property, shares, excuse me, other things. Any personal assets that you spend that cost you more than $10,000. Capital gains tax was introduced in Australia in September 1985. So your family home's exempt. So you could go and buy a house, a couple of $100,000, improve it, sell it next year for 350. You wouldn't have to pay any capital gains tax because that's your family home. So that's exempt. And if you hold an asset for over 1 year, then the gain is actually reduced by 50%. And then what happens, the gain is added to your income in the year of disposal and then taxed at your marginal rate. So we're looking at an example of that. So here we are, look, someone's bought some land back in 2015, cost them $200,000. They paid stamp duty of $5,435, solicitor's cost of $1,500, and those are allowable sort of expenses, deductions from the gain. So your total ingoing cost on that land was 206,935. They sold the land earlier this year, before the end of the 2020 financial year, got $350,000 for it. They had to pay some agents' fees for selling, solicitors' costs. So they ended up with 338,000. You can see the gain there was 131,000. They've held the land for over a year, so that reduces by half. So the actual taxable gain was 65,783. We then, so add that to their other income. So it's assuming that we're talking about the same person we looked at earlier, with a $70,000 of income, add on the gain, their total income for the year was 135,000. And then using that same tax table that we looked at earlier for the 2020 year, you can see their total tax now becomes $37,736, of which was the 14,297 was their income tax, and the capital gains tax was 23,439. So that's how you calculate capital gains tax. If you're selling something, you obviously need to bear that in mind, and that becomes important obviously if you're selling farmland and so on. Any land bought prior to that 1985 start date, obviously that's exempt, so that's not a problem. But for other transactions, capital gains tax needs to be considered. So, quick sort of whiz through there of capital, GST, income tax, capital gains tax. Any questions on any of those before we move on?
So, John, on that capital gains tax front, I've got a bit of an echo, but it seems to me that there's no actual specific rate for taxable capital gain tax. It's just on top of your earnings for that year.
That is only right, yeah. And there are certain sort of reliefs. I've tried to keep this sort of simple and basic. You know, you speak to your accountant for advice around all these things. There are certain reliefs you can do. You can roll over some gains, you know, from selling one asset and buying another. You can sometimes roll a gain over and so on to avoid paying now, and things like that. But again, speak to your accountant.
Yeah, and yeah, it can be tricky for farmers as well, because I think, as you alluded to, your principal, your house, your family home is exempt.
Yeah.
But for farmers, that can be a bit tricky. As well, so
definitely. But if you're selling a farm with the house included, I think they might sort of, you know, allow the house and so many acres is exempt, but the rest of it, yeah, would be liable for tax. So yeah. All right. Any questions coming in, Tim, or not? Shall we move on?
No, only the question there around the farm.
Yeah. Yeah.
Questions come in relation to tax. None of the taxes you've covered, but are there any taxes associated with inheriting land?
Simple answer is no. I mean, you know, you can inherit something that's yours. If someone inherits something.
Yeah.
I suppose one thing I could have quickly covered was things like stamp duty. Stamp duty's sort of like a tax in a way. When you purchase some land, if there's an intergenerational transfer, so if you're taking on some land from previous generation, then there's no stamp duty payable. They call it an intergenerational transfer, so that avoids the need to pay stamp duty. That's
correct. On rural land and on residential property, of course, there's another exemption there when land's transferred in accordance with the grant of probate. It's also exempt from stamp duty. So, they're the only kind of possible taxes on inheriting land.
Yeah. Well, we haven't had a sort of inheritance tax as such in Australia for some time now.
Very good. That's it in terms of the questions.
Right. Well, and look, sort of safeguarding your business. This is a a big subject in itself in a way, but I just thought I'd touch on a few bullet points there of things that people can do to just try and help protect their business. And first of all, I've put there, know your business. So make sure you keep abreast of latest developments. So it might mean attending some field days, reading some trade magazines or something. you know, keep an eye on what's happening, and incorporate some things that can benefit your business if you can. Keep up to date with your education and training. So it may be, you know, if you find something of interest, you can do a course. As I mentioned, I do a bit of, you know, part-time agribusiness training. There's lots of courses out there that people can do if they want to just broaden their knowledge. You know, maybe a diploma of agriculture or something like that, which is good. And I put use insurance to protect against risk. So, you know, there'll be certain, you can't insure everything, I guess, but, you know, what are the main things that could go wrong, and can you insure against it? So, you know, we got a good harvest up. Excuse me. I suppose there's a whole chance that there still could be a washout or a flood or something like that. You know, you can obviously insure against things like that. So you know, take out insurances that are rough. It might be a health insurance, income protection type insurance. So if you're injured or not able to work, you can use the insurance monies to pay someone else to do your job for you. Have a business plan that sets out the business goals. So I think someone mentioned at the very beginning, you know, about helping to achieve your goals. So you need to set out your goals. You need to know where you're heading with this business. So have a business plan, you know, who you are, what are you producing, you know, who your markets are, and put your goals in that. And that's a sort of a living document. You know, you prepare it now, but then you're going to review that maybe every 6 months, every year at least, to see if that's still happening. A business plan might be 3 years, 5 years, something like that, to see where the business is going over that period of time. And then complete a risk assessment. And I'll go into that in a bit more detail in just a second, but you know, okay, you've got your budget, you've got your business plan, you've got your budget. What could go wrong? What could go wrong? Well, it could be a drought. You know, harvester could break down right in the middle of harvest. You know, wool price could collapse, as we've sort of seen a bit in the last year. All those things. So, okay, if that happens, what can you do about it? And that's what a risk assessment will cover, as we'll just see. And then, you know, especially if you're a one-man band on your property, make sure you've got someone else trained to cover day-to-day operations in the event of an emergency. So if you did break a leg and we're in hospital or something like that, is there someone else who can just step in and keep things running for you while you're out of action? And this is an example here of a risk management sort of template. I copied this from the LLS probably about, I don't know, years and years ago, when they had some grants for fencing or something, different things that they did. So it's been, I've used it ever since. It seems to be a great way. You sort of look at the likelihood down the left-hand column of, this is like a matrix here. Likely there's something happening. And then across the top is, well, what consequence is that if it does happen? So for example, you know, let's say, is there going to be another drought? Well, it's almost certain there'll be another drought sometimes. Well, what's the effect that's going to have on your business? Is it going to be a minor effect? Well, it's going to be a moderate or a major effect, probably. So it's probably going to be a high impact there. And if we look down the next slide, excuse me, you can see how that works. And this is some examples here. So I was saying the first one is about a drought. So what can you do to reduce the impact of that drought on your property? So it may be you might want to put in some better water infrastructure. You might want to put up a shed to store some more fodder, something like that, to help get you through the drought. You know, you got a key person who really runs the property, does the management, most of the labor. Suppose that person is sick. What's going to happen then? Well, you've got a son coming on, or you can employ some extra casual labor, but have a plan in place as to what's going to happen for each of those sort of potential risks there. So that's that. And I think we're probably, yeah, any final questions? I think we're just about up to time, and that's the last slide. Any final questions about anything that we've talked about already?
John, just before we jump into too many questions, I'll just ask everyone that's watching us to head back to slido.com and to the hashtag numbers, and there should be a thing there, a survey there, one of the polls similar to the ones we did at the start, and it'll give everyone the opportunity to let us know how they found today, let us know a bit more about themselves again. We're a government-funded program. The New South Wales DPI funds the Young Farmer Business Program, and if you take that back a step, it essentially means that it's taxpayer-funded. So our feedback's really important because we want to make sure that we're spending the tax dollars as best as we can. So please let us know how you found today. Hopefully it's been as insightful for you as it has been for me. And if everyone could start doing that, it won't take too long at all, and just keep listening to us in the background as we answer a couple of quick questions. The first one, John, is what's the easiest way to keep your tax invoices?
Look, you can, these days, a lot of invoices come on the emails anyway, don't they, from suppliers and so on, so you might just want to save them on your computer. As long as you save them somewhere, that's the main thing. So you might even want to, all your paper ones you get, dockets and stuff, you can scan them all, save them on your computer if that's what works for you. As long as you've got a record of them, that's acceptable. Otherwise, just keep them in a safe place in a filing cabinet somewhere, I suppose. But yeah, but certainly, the ATO are happy with modern technology, and as long as they're saved and they could be retrieved if there was an audit or something in a couple of years' time, that's fine.
Yeah, and there's also, of course, integration with some of the new software products, allowing you to keep them on the cloud in Xero and things like that.
Yeah, exactly right, Tim. Yeah.
I think that's about it. I've just had one. Okay. I'll have one more check of Facebook, and it's back to the subject of bookkeeping.
Yep.
And are there professionals that offer bookkeeping services? Is it worth getting a professional bookkeeper to help out your small business or help out your farm?
Look, it might be. There are bookkeeping services, and a lot of communities have got a certain person who does just bookkeeping for the community and businesses and so on, and it might be a reasonable cost, and you've got to just weigh that up. If you're going to be paying someone maybe $30 or $40 an hour for doing your books, that might be more cost effective from your point of view rather than you spending hours doing it yourself these days. But I think whatever you do, make sure you keep a handle on the figures. So even if the bookkeepers does the books for you, still review that information once they've completed it, so you can just get a handle of how your business is tracking. It's easy just to lose sight of things, I think, if you let someone else do all that work for you. So as long as you still keep an eye on the figures, that's fine.
Yeah. Great, thanks, John. And I think we might take this one as the last question, mindful of time, but is the Xero software program worth the money?
Look, the money, it depends on how I think the fees are based on the amount of transactions and so on that go through, so it can vary from business to business, I guess. But look, I think it is. I mean, you've got to use some program, and there's going to be a cost to them all. And as Tim mentioned earlier, and I find as well, Xero is just easy to use. It just links to your bank. You just can easily, allocate the income and expenditures of the different categories, and the reports are just there at your fingertips. It's there on your mobile phone. You can look it up whenever you like. It is just pretty easy to use compared to some of the other systems that I've had experience with.
Yeah, and I think it comes down to how you value your own time. And if it's going to cut the, you know, if you're paying $50 a month for argument's sake, and you value your own time at $50 an hour, and the software program saves you more than an hour a month, then you know, that could be a potential way that you might justify it.
Exactly right. Yeah.
Great, John. Well, I think that wraps up the questions for today. So thank you very much for your time this morning. And to anyone that tuned in and out throughout, we'll send out a recording to everyone. And until next time, goodbye.
All right. Bye-bye, everyone. Thanks for listening.